Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Although there's no major visible change on the monthly time frame, the weekly did open with an immediate probe to the upside. On the daily, we see that the continuation of the one-time framing up, probing above the key 2894 level, which is now repaired. And briefly above the 2900 area through the session. However, the opening gap was closed through the session and we settled back inside or below the 2894. So that's a potential fail break from this level and leaves potential daily excess to be confirmed in the following sessions. On the profile, most notably, we see three things mainly. We had an inability to hold above the 2900 area, and actually after we came back down, we were not able to return back up. So that's an important thing. The second thing that we see is that the short-term responsive buying coming from the lows was very mechanical, probably driven by short-term money failing to close the gap by one tick and then trying to make its way all the way up. And then we also have short-term money involved in the selling side. You see that the L pullback or the L high, the halfback of the session moved lower when we extended on MN, but before that happened, it was really close, and L approaching that halfback was sold back down. So very mechanical trading. There was a late effort, and this is for me is the most important thing that we can see on the volume profile. There was a late effort to close the gap, and actually it closed the gap it came exactly to the tick to Friday's high, but left an incomplete auction to the outside. This was a battle, and it was pushing, and couldn't get back inside the range. So sometimes what doesn't happen is very important. Is actually sometimes is more important than what does happen. Despite several attempts, we could not get back into the range, and now we have an incomplete auction to the downside. So this low is very weak and is not very secure. Having said that, our immediate focus for the morning, for the following session, is assessing continuation of this late move, continuation or lack of it. If we do get acceptance below this level, that denotes change, because in fact that will stop the daily one-time framing up, and if we get acceptance down there, that will confirm the daily excess that we saw in the previous chart. On the other hand, if we do get acceptance above the 2894 level or above the afternoon high, that will be the first time since early May that we have acceptance, a continued acceptance, 2 sessions in a row above the 2894, and that will keep alive the potential break upwards and increasing the odds of going to the all-time high. It's a very interesting setting for tomorrow. Remember, anything can happen because odds are just odds. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Any opinions, news, research, analysis, prices, or other information offered by Grasping the Market is provided as general market commentary and does not constitute or replace investment advice. Grasping the Market accepts no liability for any loss or damage, including without limitation to any loss of profit which may arise directly or indirectly from the use or reliance on such information.